Welcome back, guys and girls, to another episode of Quick Tips. Now, in this Quick Tips episode, we're going to be covering phase identification and the importance of it. So what is phase identification and why is it important? Well, we have two phases. We have the impulsive phase and the corrective phase. So the market is forever moving impulsively or correctively. By understanding what phase we're in, it gives us a very, very good indication of what's going to happen next. If we see something moving up within a corrective phase, we have a good indication that the next move will be impulsive. The reason why that's super important is because in some types of situations we will have this. Let's say we have the impulsive phase moving to the downside, and then we're looking at the corrective phase, which would be the correction, so just a continuation. Now, understanding that this continuation pattern, we're looking for sell setups. Now, when we're looking for the sell setups and understanding that the impulsive phase may be happening, the market doesn't always pull back. So what we see is the market impulse down. We get tiny little patterns, they impulse down, tiny patterns, impulse down. So what tends to happen is that traders, they wait for the market to impulse, pull back, impulse, pull back, but in certain types of situations the market doesn't pull back, and you'll have traders forever feeling, well, that one just didn't pull back, so I didn't get involved in it, when in reality, once you understand what phase you're in, it gives you a good indication to be on the ball, be looking at the 4 hour and the 1 hour and anticipating that the market may not pull back as deep as you expect, but then you can still capitalize on that. Now let's take a look on pound New Zealand, what these phases look like on a few of the high time frames. As you can see, we're on the daily chart, and if we look at it and zoom out, we can see this whole pattern is an impulse correction. So as you can see, the whole move is just one big continuation pattern to come to the downside. But what is super important for us to understand is that within corrections, there are impulses. And within impulses, there are corrections. So what do I mean by that? Well, I think we can all agree that this is the impulsive move. We can see this is the pole of the flag. If this is a big continuation pattern, that is the big move down. But we know the market doesn't always move in straight lines. Sometimes it is very impulsive and it doesn't pull back that much, but sometimes we do get them. So in this type of situation, we can see we've got little corrections within them. And if we zoom in, let's go to the 4 hour, you'll see what I mean. So if we go to the 4 hour chart, the reason why this is very, very important is because when we look at the particular structure, let's just outline this here. We know this is the big move down, that's the impulse. But within there, we can see that we have corrections. And if we look at that part, we can see that's just an ascending channel. And then we have our correction, we have our impulse, we have our correction, we have our impulse, we have our correction, we have our impulse, correction, tiny little impulse, this correction here, impulse, tiny correction, and then bigger impulse down, and then we just trickle our way down. But the whole move is the impulsive leg, essentially. But as you can see within there, there are still impulses and corrections. So this is the matrix of it. And if you're either new to Falcon, you've just recently done the Foundation series, or that you've been in Falcon for a while and you're struggling to understand what phase you're in, remember the matrix of the market was overwhelming to me at the beginning as well. But what you'll realize, it really does become second nature by understanding that the market is always moving impulsively or correctively. So by you anticipating what move we're in, it gives you a good indication of what's happening next. And when we zoom in a little bit further and take a look at the current structure, you can see by combining these key components, it gives us a good indication of what's happening. So if we look at the structure, now we know on the bigger time frame, this is actually just one big ascending channel to essentially come down. So whether it comes all the way down and breaks from here, or it actually comes back down, goes back for one more high, and then comes down, that remains to be seen, and we will reassess that at the time. But what does give us a good indication is by combining what we've learned in the Quick Tip series of nature, looking at the overall structure, looking at multi-touch identification, and really looking at the patterns as a whole. So if we look at this area here, we can actually see that we have 1, 2, potentially our third touch, because we want to go over the most recent 2 touches. If we just rein that in a little bit to make it as clear as possible, we want to go over the most recent 2 touches with the top of the channel there. So we can see 1, 2, could we get a third touch? The reason why this would be possible by understanding what phase we're in is that, remember, within a correction, so we can identify, say, that this is a correction because we know that's the bigger impulsive move down, and this is just one big correction, but within there's going to be impulses and corrections. So what do we mean by that? Well, you can see here, there's the impulse, and this is just a correction. So you can see this is actually just a continuation pattern that may be going to the upside longer term. But for the short term, it means we can anticipate selling opportunities. So when we're looking at something like this, we can take a look at the top of these structures and say, well, if we're looking at this pattern, if we know that this is potentially going to be the correction because that was the impulse, and natural progression within the market is to do this, impulse and correction. So natural progression, remember, is impulse, correction, impulse, correction, impulse, and then it creates an overall trend within the market. But what we need to also understand is that these impulses and corrections can actually turn into just a bigger ascending channel, like we have here, which is a reversal. And if you look at the pattern here, we can actually see that we have a impulse, and this is just a correction. As you can see, this is just an impulse correction, bear flag, to actually come to the downside. But then longer term, we can see, well, there's selling opportunities here. We have the trend line here. We have potentially 1, 2, 3 within this area. There's the impulse. There's the correction. And then we're going to buy it longer term, because with multi-touch identification, we understand that we could get that third touch at the top. And then when we zoom right out onto the weekly, we can see that this whole move and the inception of it really was just an impulse. There's a correction to then come to the downside as one big continuation pattern. So I wanted to zoom out and really show you exactly what that means. And honestly, don't worry if you don't get that straight away. Soon enough, you'll just see it as second nature, that everything is just an impulse and a correction. And what we're using is we're using patterns, we're using the nature of the market, we're using overall structure, and to really hone in on how to capitalize on that. The high time frame structure is paving the way, and then we just need to take advantage of that. So that is exactly what we're focusing on. But going back to multi-touch identification, we understand that yes, we have 1, 2 touches, and we're looking for the third touch. But remember, the third touch would be the complete pattern, but it doesn't have to do that. So because it doesn't have to do that, this continuation pattern could be starting from here, and this could be impulsing, and it could keep moving to the downside. So what you do in this type of situation is that you're selling with the intent that it doesn't have to go all the way back up to the top, but you understand that that is possible. So that is the real difference within the market, which is unique to Falcon, is that you're not always forcing your beliefs on what you think the market should do, but rather you're understanding what is possible within the market and then capitalizing on that. What you're saying to yourself and your psychology is, well, the third touch would be perfect, but the second touch is also valid. Rather than you saying, well, I need to see the third touch before I take it. If you bring in arrogance in the market, it will humble you in seconds. So the most important thing is to really take yourself back from that. And this comes from experience, that I used to do that. And what I found that really was a game changer for me and many people within the community is having that neutral approach of understanding what is possible within the market rather than what you want the market to do or where you want the market to go. So a real important part and key component by understanding how important the phases are and for us to anticipate what can happen next within the market. So I recommend that you look at as many of these impulses and corrective phases so you understand what is happening, because remember, within the corrective phase, it's not unusual for the market to pull back deeply. So if you imagine that you're, let's say, buying or looking for buying opportunities as this is moving up, but it's the corrective phase, what can happen is there's an impulse and the correction is deep like this, because you don't know that you're in the corrective phase normally until you're about halfway in. So what I mean by that is you'll see an impulse and correction. It looks like a continuation pattern to the upside. After the impulse, generally if it's the corrective phase, it will correct very deep and almost to right back to the low of where you would have bought it in the first place. Because what will happen is it will create something like this, which will overall resemble more of a ascending channel, which, as you can see, is more of a correction. And if we apply that knowledge by understanding it, how would we know we're in the impulsive phase? Well, it's very likely if we get the same kind of formation, we'd have an impulse a correction. They wouldn't normally pull back as deep as that, but then they would impulse, correct, not too deep, impulse, correct, and then we know this is more of the impulsive leg rather than the corrective part. So the point in which we differentiate it is when you're halfway in, because you don't know at this stage, because this impulse could be very big, and then we know this is part of the impulsive move. But when you get the correction that corrects deep enough, almost to the low of where you would originally look to buy that, then you know that this is actually just a correction. And the easy way to understand where the corrective move is normally where it comes into it. So as you can see, this is almost a replica of what we have here. So if we had a move down like this, then we know this is the impulsive leg, this is the corrective, so we can expect this to actually come to the downside, the same way we're expecting this to come to the downside. So I hope that particular one helped, and I want to show you just one more example by understanding the phases on pound dollar. So let's take a look at that. Now let's take a quick look at pound dollar of understanding the phases and the importance. So if we link this back to, let's just take a look at this from even 2002. If in a simple format, we just look at the overall structure, this is just one big ascending channel. We know that this is an ascending channel, but within it, what do we have? We have a move up, we have a correction, so we have our impulse, correction, and then the move up. But notice that even though we have an impulse, correction, impulse, this whole move is actually just an ascending channel, which is a correction and a reversal to come to the downside. So by understanding that information, it just gives us more of a broader understanding. And as you can see within here, of understanding multi-touch identification and patterns within patterns, notice how that we have an ascending channel within an ascending channel. So again, a pattern within a pattern, and then we have a continuation pattern within it as well. And if we actually look even further, we can see that the market is forever moving impulsively or correctively. A correction, impulse, correction, impulse, correction. And when we take that one step further and look at the continuation patterns that we have, let's take a look in this particular area. We also have a pattern within a pattern. So if you look at that continuation pattern here, just a big impulse continuation, you then have an ascending channel within there. So you know the ascending channel is a reversal, and you know that this is a continuation pattern to head to the downside. So you have a reversal pattern within the continuation, which gives us an even greater edge within the market. And that's why, by understanding what phase we're in, and then combining these key components with pattern identification and patterns within patterns, multi-touch identification, the nature of the market, this corrective nature, it's really keeping you very ahead of the market overall. And as you can see, as we work our way down, you can see that even though we've identified this move here as the impulsive leg, so this move that we have here, so after we had a break of this bigger pattern, this essentially is the impulsive leg, this is the correction to anticipate to come to the downside. The reason why we've been forecasting this for weeks is because we've just looked and dissected data from 2012 and seen that that is how the market works. It's been working that way since day one. So by understanding that from literally 2000 to 2002 and then so on, we can see that's how the market actually works. But you can also see that within that impulsive leg, what do we have? We have an impulse, correction, impulse, correction, impulse, correction, impulse. So what do we have here, and why are we anticipating that move? I think you guys and girls can see that now. By understanding what phase you're in, it really keeps you ahead of the market. And by understanding and combining those key components, it always keeps you ahead of the market. But what really keeps you 10 steps ahead of the market is learning how to forecast, and combined what you've just learned with forecasting the market and the power that it has within your subconscious. I cannot wait to dig into the next episode of the Quick Tips, and I'll see you all there.